Good evening, Dr. Dim.
Good evening, Chief. How are you?
I'm fine. Okay.
Yes, sir.
Well done.
Sir. Okay, I think we're good to go. Good evening, everyone. Oh, sorry. My Instagram. Oh, come on. 1 second, please. Yeah, good evening, everyone. Welcome to the Pulse Weekly, our weekly appraisal of the markets, and a few assessments of the major cryptocurrencies. So, as usual, we'll start today by looking at what's been happening. Of course, we know we know what's happened today. I was kind of hoping that we wouldn't have the repeat of Black Friday that we had last year, but apparently the market had other plans, and it's quite, I don't know whether it's quite coincidental or funny that it's today of all days that the news comes out that there's yet another variant of COVID-19 virus, and if you are watching the markets, you'll have seen that.
Hi, Doc. We can hear you. Good evening, everyone. Where is Dr. Demi? Okay.
Don't worry, you will come back.
All right. Okay.
Apologies for the breaking transfer. Technical issues, as they say. In this case, internet. So usually I try to get off my own Wi-Fi and use my mobile hotspots because for some weird reason that's usually more reliable. But interestingly, the computer is not seeing my mobile Wi-Fi, so it's a bit of a challenge. That's probably the reason why it went off in the first place. Can you hear me clear now, though?
Yes, loud and clear.
Yes.
Okay. Thank you very much indeed. So as I was saying, I guess it was just an opportunity for some market makers to dump on the price because of course, the news of the COVID variants. But having said that, let's get to the meat of the stories for today. The first thing is, one, we've had a crash to 53K. Well, not really. not really a crash in the real sense of it. It's more of correction. And I would show you later in the charts why it's more of a correction. And I mean, the first question many people ask, like usually, is, is the bull run over? The bull run is not over for obvious reason, because there is a programmatic arrangement in the way the price of Bitcoin goes. And I think I mentioned that before. So I wouldn't conclude on this particular bull run till we cross 100K. Anytime after we cross 100K, it's no man's land. So I would say, yeah, we might be close to the end, but we're not there yet. And the higher the price goes, the closer we are. So we're almost stopping 70K last week or the week before we started this correction. So right now we're just at the brink of two key support levels, one at 53.54, the other at 49.50. So the general narrative is, new COVID variants. There was a lot of discussion in the morning on the WhatsApp group about, the relevance of new variants. The viruses mutate every time. I mean, for each time a virus infects somebody, it creates a mutation. But that's just the truth. And for all the mutations that we created so far, there's not in anyone that is more than what's already known. It's just more infectious variants of the same virus. But of course, the media feeds on frenzy. The pharmaceutical stock prices also feed on those kind of news. So it's expected that we will have that kind of reaction that we had today. So what does this mean? It means that, well, the short-term sentiment is bearish. As you will see through fear and greed index, we're almost neutral. We're on the fair side of neutral, if I'm going to say that. And in terms of where we're expecting the price to be honest, I expected the price to be a lot higher by this time of the month. I thought we'll be closing in on either 80K or 90K, but as it is right now, we're still sitting below 60K, which is quite surprising, because there's a lot of demand, especially institutional demand, and I'll get into that. I'll get into that when I touch on some other news items. In terms of regulation, I talked about this news from the US senators trying to repeal the crypto part of the infrastructure bill last week. And there was another, actually two. There was one legislation in India that's coming into effect in December that sort of wants to limit the exposure of the country to the main cryptocurrencies like Bitcoin and the majors. I think that's a good one, because at least it provides some clarity for the large population of people that you have in India. Generally speaking about what has happened to the markets, I think this is the lowest we've been in 6 weeks. And this is also the lowest exchange balance we've had ever. So I usually talk about exchange balances because I usually try to make people see what is going on behind the scenes. So the price is something. What is actually happening to the real commodity or asset is another thing. So like you talk about the price of crude, or you talk about the price of cocoa. Now, the price on the markets, like on the CME or the BACS market, is a totally different thing than what is actually happening on ground. So in as much as the price of Bitcoin looks like, Bitcoin is in so much supply, what is happening in the background tells us that, we are gradually running out of supply by the day. So again, on-chain metrics have shown this week that we've hit the lowest levels in exchange balances. Exchange balances are a metric of how much Bitcoin is sitting on the centralized exchanges like Binance, Coinbase, Bittrex, Bitfinex, Crypto.com, KuCoin, and all the Kraken, Gemini, and all the major exchanges. So that's metrics sort of tracks the exchange wallets. That's how it derives that value. So the metrics on the on-chain metrics looks at all the wallet that belongs to exchanges and summarizes the balances of them. And I mean, practically since November or December 2019 is when these balances have been going on. There have been surges. There have been surges in exchange balances in between. One, when there was the outbreak of COVID, when all the markets was, going crazy and everybody was running for cash. The second one was when we had that correction in April, May, when there was the China ban and what's it called? The miners were being chased away from China. So two of them are very logically explained. The first one, everybody was running for cash. And as a result, everybody was trying to cash out in the fastest possible way. The second one was because the Chinese miners needed to capitalize their Bitcoin, as it were, to help their relocation out of China. And I think that happened pretty quickly, because if you were looking at the hash rates then, the hash rate went down. Then after about 6 weeks, the hash rate started going up. The hash rate is the rate of transaction processing on the blockchain, on the Bitcoin blockchain. So really, as a matter of fact, the fundamentals, as they say, still supports that we're driving towards more and more scarcity for Bitcoin. So this reaction that we have now, expected, one, because many of the institutional traders that are positioning or that have exposure in the cryptocurrency world also have huge leverage exposures in the stock market and in the equities market. So what happens is, when there's a huge crash in general equities markets, they quickly cash out of their crypto positions to support their positions in the leverage equities market. Meaning, because you can do a cash call, quote unquote, faster on the crypto market than you can do on any of the other traditional markets. So they quickly just dump on the crypto markets, collect their money, and then put it back into the equities markets to support their original position. So in a way, they use the crypto market to buy the dip on the stock and equities markets, or for the benefit of people who understand what I'm saying. So that's usually why you have this drawback. And if we go back to give you a very good example, I'll show you the charts ahead of time today. If we go back to March 2020, just going to show that. Yeah, so this is March 2020, when COVID started. When you look at this and what happened from the next day, so the impact of that sharp drop that we had from COVID lasted essentially about a week, and then it started picking up. And within a period of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, we have flipped over in sentiment from the bearish sentiment to bullish. And from then on, the market started climbing. So if you were to do an extrapolation on how you can see how minute that is in the scheme of things now, I mean, that was when Bitcoin went as low as 4,000 per Bitcoin. How seemingly inconsequential that, and it was a major dip. I mean, to give you context, this is on that day, which was 12th of March, when WHO made the announcement. We're looking at almost 50% drop, right? Yeah, almost 50% drop on the day from the open of the day, which was 40%, 40% one single day. So I mean, for many people who have come through the bear market since 2017, I'm sure at this point they were just like, you know what, this is the end of the world for Bitcoin, and just sold off. And if you looked at the what's it called now, the bear accumulation chart on on-chain metrics, you see that there was a lot of accumulation from whales, from major Bitcoin holders at this point. They were just excessively buying the dip actually at that point in time. So yeah, expected that there will be a reaction to this. I mean, I didn't see this variant thing coming at all. I just woke up this morning and I saw the news and like, oh no, there's another unexpected correction. How coincidental is it that it happens on Black Friday? So for me, I think it's just one of those money games that will get to be played by the institutions. In another news, we see that BTC accumulation in the last 1 week is almost at its highest. So people we call whales in cryptocurrency are people who have more than 100 Bitcoin. And they accumulated almost by, I mean, if we add today, this was before today. So if we add today's value to it, it will definitely be more than 0.3% of the total circulating supply of Bitcoin in 1 week. So what it means essentially is that the big players are stacking more Bitcoins, whilst small fries are selling off, usually at a loss or because of leverage position, have to sell back into the markets. So that's what's really happening behind the scenes. So when people say, is the market going to die, or is Bitcoin going to zero, or is crypto going? Crypto is not going anywhere. You might as well just get used to that fact. It's just like saying, is the internet going to go away? It's not going to go away. So that's what's happening. There was a funny study by Crypto.com on Australians, and the top gift people wanted for Christmas in Australia was crypto, interestingly. So it tells of the degree of adoption even down there in Australia. And I think it's in line with that study that was carried out in the US that said about 18% of people have one form of exposure to crypto or the other. Like I always say, it's not a wise thing to hold your cash in savings accounts. I mean, I'm not a financial advisor, but it's just basic common sense. Cash is the biggest shit coin that you will ever know because the government can afford to print as much as they want and call it fancy names like quantitative easing, monetary policy, and use all the economic speak to befuddle people on what's really going on. But what's really going on is when the government has a problem, the government prints money and then the government calls it something. I mean, and that's not the, it's not exclusive to countries like Nigeria. It's across board, even in the United States. And I think that's been running since, the 1970s when they canceled that gold standard with Bretton Woods agreement. So really and truly, we are being depleted by the government on a daily and a monthly basis, because as the government continues to print money, the overall supply of money grows. And when the supply grows, the value drops. So I've never been an advocate. I mean, ever since I started on this crypto journey, I've never been an advocate of people holding cash reserves in their fiat currencies. Buy Bitcoin, or at least buy Ethereum, and just hold. Because at the end of the day, no matter how, volatile, as they say, that's the word that's been bandied around by institutions or on this asset, no matter how volatile it is, year on year, it has shown that it is still a better store of value. And I mean, we can take a look at this is 2019. If I were to go to, okay, I don't have that yearly chart. But if I were to go to a yearly chart, okay, I don't have yearly charts here. There's another tool that uses yearly chart. I will have shown you how year on year you could actually see that. Yeah, so that's a quarter. Sorry, it should give me some better view. So find this number. Sorry, I messed up. I'm the oldest. Apologies for the jargons and the charts. Just some tools. So this is a 3-monthly chart which shows different quarters since essentially 2011. And I'm using Bitstamp deliberately because of that, because Bitstamp has one of the oldest records on the charting price of So if we look at Bitcoin, then from 343 year on year, it's been growing. Fortunately, this thing is too, yeah, okay. So, yeah, so apart from this bear market, so from 2011, 2013, there was that bear market then. There was the 2013 bull run, and then from 5 to 11, from 11 to 13, from then it went to 100. Despite the volatility, it's been climbing, really. So what I'm trying to say is Bitcoin has shown over the last 10 years that it's a better store of value than even gold. So it's no matter what's happening, you need to be very cautious that the value of this asset class is not going to go down anytime soon. In terms of good news, quite a number of good news actually, regardless of what happened today. One is that there's an official acceptance of physical Bitcoin fund in Singapore. Why is this important? Singapore is the money hub for I would say not new money, but yeah, middle-aged money, not so old money. So before now, the old money used to store their wealth in Switzerland, the Swiss banks, and all that. But Singapore has found a way to warm its heart to the middle-aged money. Let me use that word, or the newer money. And before the advent of crypto, there are actually physical vaults in Singapore where people store gold. I mean, these are underground vaults, like 100 meters below the ground. I only happen to know this information because I attended one seminar and the guy was gisting us about, how, people store their money, their gold there, and how you get access there because you store your gold there, and how wealthy people in UK inclusive actually warehouse some of their offshore wealth in gold in Singapore. So Singapore is a significant hub for wealthy people, and I think this is a huge step because once you have this fund, what that means is that institutions are going to start looking in that direction and are going to start positioning accordingly. And like we had for the Canadian Bitcoin Fund, if you remember back in February, that fund has not depreciated since February. Even during the dip that we had in May, that fund has still continued to grow. It's almost like the more Bitcoin dips, the more subscribers they get. So all these are pointing to just one and the same thing, that adoption is still very much in play. Then I saw this one that was quite interesting. This guy is can't remember the full meaning of the abbreviation of his name is RSP. Right there. Ricardo Salinas Pliego. That's his name. Ricardo Salinas Pliego is the third richest person in Mexico. He's a billionaire. He's said to be worth like maybe $12 billion plus. So last year. Now, this guy was saying to his guys that now is the time to buy Bitcoin, and I'm not surprised because if like you will imagine, people who are at the threshold of billions in terms of net have a particular way of thinking. And when Michael Saylor, who I usually refer to a lot on this channel, started talking about adoption from high net worth individuals, I knew that a lot of people would start listening to him. One, because it's a billionaire that's saying it. Two, because the person is in the United States, and a lot of people take directive from what people are doing in the United States, and everybody will just be like, okay, if this guy who's a billionaire in the United States is saying that we should do this thing, then there's something to it. And if you listen to Michael Saylor, his thesis is the richest, as I always say, is the richest thesis on the case for Bitcoin and blockchain. And I usually say that he's able to do that because he's a technologist, he's a what do you can call him a rocket engineer, or is an engineer from MIT, so he has an engineering background. Then he has a finance background, and then he's a business owner. So the key components, if you will, of finance, physics, and business are present with him, and he's able to combine all the three together, give you the analysis that this is actually one of the best form of storage of values since the inception of mankind, and that it's going to eventually erode every other storage of value. So, and he's been saying it, and I mean, since he began saying it last year, we've seen MicroStrategy stock outperform even NASDAQ in 2020. So, really and truly, I'm not surprised that this guy is saying it now. Like the MicroStrategy said, we might actually have a mega cycle instead of the usual bear market, as soon as billionaires starts, paying attention and accumulating crypto and accumulating Bitcoin. So really, what am I saying? Regardless of what happened today, and maybe what will happen next week or a few days' time, it really doesn't matter in the scheme of things. Like I showed you on the chart, if almost 50% drop in the value of Bitcoin last year is actually not visible. You saw the charts. It's not visible on the chart. It's almost like it never happened, which is crazy. I mean, on that day, everything was a wreck, literally. But here we are, barely 19 months after. Bitcoin has done much. How much are we saying? It's done more than 10 times, and we're still saying it's crashing. It's done more than 10 times that price. The price at the lowest, and everybody's still freaking out that it's crashing. So having said that, usually I've stopped doing coin review and coin of the week, but today I thought it's important to actually bring this one up. Bearing in mind that I've talked about it before, and what I said about the CRO or Crypto.com coin then was that we became CRO fans club, and that affected our decision making in exiting when we needed to exit. But I don't think that takes away the original assessment. So I'm going to tell you a story about CRO. What we knew about CRO was selling for around 30 cents. No, sorry, 3 cents. 3. And the analysis we made then was CRO was positioning itself as a major competitor, was trying to stand up its infrastructure as a major competitor to Binance Coin. At that time, CRO was actually not a coin, it was a token. So quick question, what's the difference between a coin and a token? A coin has its own blockchain, a token sits on another blockchain. A token is a tenant, a coin is a landlord. that simplifies it. So CRO at the time was a token, it wasn't a coin. And what they were doing then was they had another coin, another token called MCO. MCO was like how do I put it now? It was a coin that you used like a loyalty coin that gives you some rewards on the chain or on the ecosystem. But what we saw then was that the roadmap CRO had and the rate of growth of the users within its system, we felt that CRO could actually not necessarily be a challenger to Binance chain or Binance coin at the time, but that with the rate of adoption and growth, CRO could do wonderland. Unfortunately, I don't think Mr. Yoba is on this call, but I remember that discussion we had then that it might be a good idea to start stacking CRO. And we did start stacking CRO, and to be honest, I stacked a great deal of it. But I think my major stacks happened just at the peak before the September crash. And I was upset because not only had I bought a lot at a very high price, I'd also staked it, so I couldn't withdraw it. And from that time, literally from mid-September to October, it just started coming down. Now, I'll show you the chart. It started coming down and just kept going down. And what was happening essentially was that because the company itself had the biggest stack of CRO, they were selling their CRO for Bitcoin. So that was dropping the price persistently. So by February, when altcoins started picking, by January actually, altcoins started picking up after Bitcoin had done all-time high to the 40s. my staking was over, so I just pulled out my stack and like, yeah, no point waiting anymore. I sold it. Of course, at the time, I evened out my losses on CRO. But in retrospect, when we look at how much CRO we had then versus how much it was selling just last week, it was selling at $1 last week. I mean, that was, to be honest, that would have been a couple of $100,000 that we sold for. How much did we sell it for? Maybe like 20 or yeah, maybe like 20 or $30,000. So really, it's a story of impatience, and it's a story of how things grow in crypto. Why am I bringing it up again now? Well, we're close to the end of the bull run. Well, at least we believe that there will be some bear market correction. I don't know how long the bear market is going to last. I think the minimum we'll see is probably 6 months, or probably till the end of next year, and then the market will start picking up. But I think that between now and the end of the bear and bull run, we might see another 100% gain in the price of CRO. And the reason being that from the point of assessment that we did originally to say this coin has potential to create a good ecosystem, they've actually now gone ahead and created that ecosystem. So all the things that we used to think that they were going to do 2 years ago, they're already happening now. It did take time because it didn't happen as we expected, because they were supposed to, for instance, have their own blockchain in December last year. It did not happen. I think it didn't happen until, in fact, by the time it happened, the coin was just dropping further because everybody was already disappointed that, hey, you guys, you didn't make your timelines. But what happened was that they actually did deploy that mainnet, meaning they now have their own blockchain, and they've been secretly building. And because they've been secretly building, they've not been in the limelight for a while. I mean, they were top 10 in September. Yeah, around September last year, they were top 10. And they dropped as far as 100. But they've been secretly building again, and they've been having a lot of analytics. Deploy the exchange app. Now they've spun off what I can call a DeFi company, quote unquote. So if you don't know, there is a new token that is indirectly owned by Crypto.com called Very Simple Finance, BVS. Now, BVS is owned by BVS.com, which belongs to Crypto.com. But because it's a decentralized finance platform, they've sort of devolved it from the main company. Where am I going with all this rambling as to where? What I'm saying is, if you're considering long-term what coins to buy, you might not buy it now. You might wait for the next major correction at the end of this bull run to buy CRO. But I have my eyes on CRO, and I think my original assessment has actually come out right about them, and they position themselves in a very strategic way. For people living in US, for instance, CRO has taken name ownership of Staples Center in Los Angeles. So Staples Center is now going to be CRO Center. That is huge because it gives them visibility, helps the adoption for the company, and helps whatever ecosystem thing that they're trying to drive. So keep your eye on CRO. If you're looking for a token to buy, as I said earlier on, you can buy BVS, which is very, very simple finance token. That's the name of the token, BVS. It's on Crypto.com app, or you can, if you're familiar with DeFi platform, you can connect your MetaMask to the BVS platform, then switch. It will ask you to switch the network from Ethereum to Cronos, which is another thing. So Cronos is the name of Crypto.com's blockchain for Cronos. Let me type that in here. CRONOS. That's the name of the blockchain. So what they are trying to do, let me put it in perspective. What they're trying to do now, seeing Ethereum and Binance chain separate, meaning they have an exchange. Okay, well, Ethereum doesn't have an exchange, but Ethereum has a smart contract ecosystem, and Ethereum has been the mothership for all sorts of decentralized finance application. So what they're doing now is they've created their own blockchain, just like Binance. They've created their own DeFi platform, which is the VVS. And as people start to build smart contracts on the Kronos blockchain, the VVS ecosystem will gain adoption. And for context, I think Crypto.com used to be like 1 million users at the beginning of 2020. It's probably like 5 million or 10 million now, or close to 10 million now. So that volume is going to serve them well in the future. I don't know who this is for, but if you're thinking long term and you want to stack crypto, consider stacking CRO. It's less than $1 today, but I'm sure that in 4 years' time, it will definitely be selling at the minimum double digits, or even 3. Or CRO on Crypto.com coin and on the VVS DeFi platform. Moving on to talk about Crypto Vital sites in terms of market capitalization. Here we are, where we've dropped about 13 billion in the last 1 week, and we've also dropped about 1.3 billion in capitalization of altcoins. What does this mean, or what does this mean for the markets? I'm going to show you that briefly. So this is total market cap represented on the chart. We picked at 3 trillion week before the week of the 10th of November. So right now, technically speaking, it's almost like we're taking a retest of the previous peak. So the previous, let me put this way. So the previous peak was around here. Yeah, which was the peak we had in April, May, around 2.6, 2.45. So now the market is revisiting that level. And that's why I said, if we step back and look at the charts, really what we've had today is just a part of a longer healthy correction. So the market's been going on basically since July. We've been going on. We took a correction in September September into October. Been going up since then. I think the next leg up is going to take us to 3.8 trillion at the minimum in terms of total market cap for all crypto. For altcoins, I think the next leg up take us to 2 trillion in altcoins. How significant is that? Very, very significant. I'll go into the charts now. Before going back to our, fear and greed index. If I show you, where is that chart for Ethereum? So if I show you the weekly chart for Ethereum, it seems to be doing the same thing that the overall market cap for altcoins. This one. So if I plot it on the weekly, it basically seems to be doing the same thing. The market's peaked. It's taking a correction on the previous side. That's represented by this blue dash that I put in there. So the Ethereum price is essentially mirroring what is happening on altcoins total market cap. And what this tells me is that this bull run is no longer 100% in the hands of Bitcoin. That's the first impression I get, because I've been watching this Ethereum price actually the whole week, actually since last week. Last week it crashed and went as low as 3,958. Then it went back up to close the week at 4,262. Now today we actually went lower and did 3,009. Now it's back up again above 4,000. So I see that there's a lot of demand for Ethereum at 4,000 price level, which was around the previous all-time high that we had in May and in August of this year. So my thesis is that if we close this week, which is very likely, if we close this week above the blue line, which is above 4,000, I think Ethereum will start attempting to make its way higher. And bearing in mind, another thing that I didn't mention, if it wasn't for the Thanksgiving or Black Friday holiday in the US today is usually the options expiry day. So what are options expiry? Options expiries are like, they are fancy words for institutional bets against the price of assets. So it happens every month. There are people that put in, their best to say the price is going to be at this particular level. So you have a put an option and put and call option. I don't want to go into details of that. But basically what happens is if the price is above that level and your prediction is that the price is above that level, you win the bet. If it's lower, you lose the bet. So institutions that want to play the market play both ways. What do I mean they play both ways? They look at the charts and they determine that, okay, this is where, the likely areas of supply and demand will be. So they place their bet and say, we have an option, Ethereum at above 4,000. What it means is that if an institution says, I have an option of Ethereum above 4,000, they can devote $1 billion to it on leverage. Then they will go into the market and buy Ethereum at that level at 4,000, meaning you will always hit a buy wall when Ethereum gets to 4,000 because they have a lot of demand at that level. So what it does for them is they're winning on both sides. They're winning because they keep buying up any Ethereum that dumps to 4,000. And when the options expire, which is 5 p.m. Eastern time in US today, they win the bet essentially. So prices are usually held down on the last Fridays of the month because of that. So if you see that market is going up, when it comes to the last Friday or the last 3 days before the last Friday of the month, there's always volatility. Either direction, there's always volatility. So yes, options expiry have also played a part to this flash crash, as it were. And even though they're blaming it on COVID, we can't but keep that in mind. So yeah, that's the story for Ethereum. I think even going by Elliott's wage principle, it looks like we have a continuation wave. Once we're sure, not putting a bottom yet, until we see the open candle of next week. So on Monday morning, we will be able to ascertain whether we're done with this correction or whether we're going to try to test this zone of demand once more. For Bitcoin, where is my Bitcoin chart? Yeah, for Bitcoin, it's a bit weaker because if you remember, I said that CME and BACS are now allowing people to buy Bitcoin directly. Before now, it was institutions. So CME and BACS are major institutional exchanges in the US. They actually are like the biggest exchanges for gold and other commodities. And they're the reasons why you have, I mean, not the main reasons, but they're one of the reasons why you have crashes when the prices are correcting, because institutions are able to bet against the price of commodities like Bitcoin on them. So institutions can go on $10 billion shorts in 1 minute. So if you have that kind of short in 1 minute, you will see the effect. The price will literally drop to the floor. And then the price continues to go on its way, like if nothing happened. So because of that, we are seeing a lot of drawdown, because ordinarily by this time of the month, and historically speaking, Bitcoin actually should be in this, at the minimum, should be in this range right now, in the range of 80s. But right now, because we've had this drop down, and we've actually still not gone really beyond the 100% level, I mean 0% level of retracement. So I expect that once this is done, either now or in the coming days, we'll continue the leg up. How many weeks is going to take us to continue the leg work? I can't say. But I know that whenever that happens, it's going to be very rapid. Historically speaking, first week in December has been traditionally very bullish for Bitcoin. Even November has been traditionally very bullish for Bitcoin, but it just so happens that this particular bull run seems to have a mind of its own. So it's not particularly following the script. But having said that, I think if I go to the daily charts, yeah, still the same outlook. So we're still sitting around the retracement on the daily charts by this Fibonacci, and that takes us to 83,000 in medium term before we can say we'll see any consolidation. And I think we can have a bull trap for 100K. For the levels to watch for, the levels we've seen so far, 60,000, 56,000, 53,000 where we touched, and then Let me move this to. So yeah, 50,000, 53,000, 56,000, and 60,000. So if 53,000 holds, to actually be in line with original projection, going by this way, so it should just be like just touched on the this Bitcoin cycle, and then we're going into the fifth. So CRO, yeah, this was the CRO chart I said I wanted to show the other time. So CRO at the beginning, that's a skill. Oh, this was where we discovered CRO around, yeah, around here. And then it went from 3 cents and just crashed to, I mean, it went from 10 cents, sorry. So when it launched on, let me even go. So this is a skill because that was the day it launched. July was when it launched on KuCoin. When we found it originally, it was somewhere around 0.3. Unfortunately, TradingView is not integrated with Crypto.com at the moment. So imagine we found CRO at 0.03, which was around here. By the time it launched on KuCoin, it was already selling at 10 cents. When we went in heavy, August, it was around 13 cents, yeah, somewhere around here. So imagine the price drop all the way then. Sorry, the price dropped all the way down. Yeah, 63% drop. That wasn't, it wasn't a nice drop, to be honest. So by this time, we're like, man, these guys are not serious. Then come March, we saw it go through the roof back to 30 cents, then dropped again with the rest of the market. And then all of a sudden, since October, has just been pumping. And yeah, 97 cents, just 3 cents short of $1 in less than 24 months from when we originally made the projection. So again, significant correction going on for CRO. If I were to make an immediate projection on what this will look like in the medium term, I think we'll have CRO at 50 cents. I'll be interested in buying CRO at 50 cents now, because if it comes to 50 cents and holds, I'm sure that 1.5, $1.50 is guaranteed for CRO. Personal projection, I think CRO will do $2 to $3 at the peak of this bull run. Reason why, like I said, I expect that Bitcoin will do a minimum of 100K at the peak of the bull run. And because of that, all altcoins will just go crazy. If Bitcoin does 100K from where we are now, that's more than 2x. And about 2x, as it were. Everything else points to a 200 and something Bitcoin. I think I've shown you that chart before. I need to look for it. Is it Bittrex or Coinbase? I have a weekly chart that I did the plots that actually shows, I think it's Bittrex. No, it's Bitfinex or Bitstamp. Let me change this one. There's a logarithmic chart that I have that shows that actually the peak, yeah, pardon the colors and the annotations on the charts. Let me take out the auto. There's this chart. So excuse me, yeah. So if you look at this chart shows us the progression of the price of Bitcoin from inception, and it seems to be going in strictly within an ascending, what you call an ascending channel, meaning it's going within an ascending range of prices. So this was the peak of the last bull run at November 2013. This was the peak of the last bull run at December 2017. Going by this, my expectation is that, I think I just delete this for clarity purposes. My expectation is that we're going to see a run from here, which is what we've seen now. Let me take this out for clarity. Oh no, I can't take that particular one out. That's the one I wanted to show you. Yeah. Just taking out all the, yeah. So I wanted you to see the fractal that I had for the price of Bitcoin. So this is the fractal that I had, like a forecast fractal that I had for the price of Bitcoin. Let me hide. Yeah, make it clearer. So this is the fractal that I had for the price of Bitcoin till the end of the cycle. And I think in a strange way, this was back in July actually. Yes, in a strange way, the market has not significantly deviated from that fractal. So I had a fractal going up like this and then down, going up. So if you was to follow the same pattern, the same tangents that these previous cycles have followed, you will see that eventually, by the time this goes up, depending on when it completes the cover, by the way, right now, we need a very next 3 months to actually top at 300K. The longer this goes, I think the higher the peak for this bull run will be. I think I'm more and more convinced now that that's the way the price action is playing out for Bitcoin. So when people ask me that, is the bull run over? I mean, this chart clearly suggests otherwise because it shows that we're having almost this sinusoidal. So if we follow currently, if we drag it further down, goes to 400K, I think that we'll see the peak in January. Going by what I've seen so far, because now we've not topped out last month's high in November, which was the expectation. So it means that we might have a very tall price gap in December and January, and then you have a complete blowout in February, and then the price starts coming down in February. In a strange way, these things they have a way of coming true. Like I was telling someone that if only I listen to my own projections, I'll be a lot more successful. Anyways, that's the way it looks, generally speaking. And I just wanted to that for people who are wondering whether we are the run or not. So it's almost like we have a small plateau here, right? Around 63, 64K. I hope I've not lost my internet. Okay, still going on. Yeah, so we have a plateau there right now. If we break back above 64K, then we're very much on our way, very, very much on our way to over 100K. And yeah, like I said before, it happens very fast. And there is always the temptation to, want to keep looking at your portfolio every day. But it doesn't stay at those prices for long. As you can see, it always comes down eventually. So yeah, if it gets there, we expect to see another correction, probably another low at this level of between 50 and 60K. So that's the chart. I've sort of flipped things around today. In terms of fear and greed index, we're at neutral. Last week, we were at fear, meaning we were 34. Again, this index actually has proven to be very, very right. Even though I trade against it, but I end up biting my fingers because it turns out that it's actually right all the time. Anytime there is greed, you can expect that correction is imminent. Anytime there is fear, you can expect that the prices are going to jump because everybody's afraid. And then people are starting, the heavier, investors are going to start taking positions. In terms of where we are, again, we're still here. I know we were close to getting to euphoria just about 2 weeks ago when we're approaching 70K. And the market makers decided to cool off the market. So we are back in belief. I think this psychology cheat sheet of the market sort of helps us to position ourselves. Again, based on my projection, I think by December, January, we'll be here. And I think we'll not be here for long before we get into, complacency and capitulation. I think by February, sometimes in February, wicked capitulation of the market. So Bitcoin might have gone to 300 and then it flash crashed to 100 and the whole market go crazy like, Bitcoin has crashed after doing 4 or 5x. So yeah, that's where we are. In terms of, I talked about charts. So what I wanted to talk about today, usually Crypto Drip, I talk about knowledge sharing stuff and general knowledge, things that people want to know about. I wanted to talk about the cycles. So these cycles have been in place, the cycles in crypto market. For people who have been around for a long time, you already know what the cycles are. People who have been with me since May last year when I started talking about Bitcoin halving, you already know what the cycles are. But historically speaking, these crypto cycles are actually have been created by Bitcoin. How? So Bitcoin, as you all know, is programmatically enabled internet money. It's completely decentralized. It's complete code, but it's the first infrastructure we have as humanity to transfer value between time and space at the most in the most efficient manner. So if you consider how we used to transfer value, days of trade by barter, to cowries, shekels, to currency notes, to commodities like gold, this is the most efficient form of transference of value. And like I tell people, is an offshoot of the internet. It's because we have the internet that this has become possible. Now, in the programming of Bitcoin, it's been programmed that every 4 years, or approximately every 4 years, the supply or the rate of production of Bitcoin drops in half. It's also been programmed in the code that there is a limited supply. So Bitcoin is never going to exceed 21 million. So it makes it a finite commodity as opposed to gold. So, or diamond, for instance. If you read about diamond conspiracies, you understand that diamond is not really scarce. But what's happened is the biggest buyer and the biggest holders of diamond have amassed everything to themselves and have determined the supply to the market. And have also attached diamond to emotional things like engagement and all that. So that makes diamond a scarce commodity purely based on market maker manipulation, as it were, because you can create synthetic diamond, really. Same thing goes for gold. Gold has been the most lasting store of value that we've had since the beginning of humanity, even from Bible days. However, there is infinite supply of gold because we found out that even asteroids now have gold supplies of them. And you can develop technology to increase, your rate of production or your rate of extraction of gold. So you can hasten the supply, quote and unquote. But for Bitcoin, you can't hasten the supply. The supply is finite. It's dropping every 10 minutes. And the rate is halving every is it 10,000 block now, 100,000 block? Almost every 4 years, basically, the rate of supply is dropping. So what it means is that every 4 years, the rate of supply of Bitcoin drops in half. Because the rate of supply of Bitcoin drops in half, if we assume standard temperature and pressure, like we say in physics, meaning all other variables constants, it means that the value will go up because the supply is diminishing. So the deflationary mechanism, as they say, that was put into Bitcoin is to make sure that you don't have an oversupply at any point in time. And as a result, it's able to retain value. So what has been happening from what you've seen through the charts that I was showing you on the monthly chart of Bitcoin is that each time that halving happens, the market eventually responds after like 6 or 9 months to that drop in supply. So the halving happened May 2019, the May 10 or May 12, 2019. And since that time, the market started responding. I think the peak of the response picked up in October. And we've seen that first wave go all the way from October till May this year. In previous cycles, we've had single waves. In some other cycles, we had 2 waves. In this cycle, obviously, we had 2 waves. The first wave ending in May, and the second wave picking up in July. So the market responds, and the price action responds to that halving phenomenon that drops the supply. And when that happens, the price goes astronomical. We've not yet seen astronomical prices in the price of Bitcoin because we're not yet at the end of the cycle. When we get to the end of the cycle and you look at the charts, the chart will almost look vertical. It forms what we call a blow-off top. Now, the reason it forms a blow-off top is speculators, market makers, traders, whales are always trying to see the best price at which, or the highest price at which they can sell Bitcoin. So it keeps pushing up the price towards the end of the cycle. And once you get to the end of the cycle, there's a blow-off top in which whales sells their Bitcoin to the new entrants and cash out, essentially. So over the last 12 years, that's what's been happening. So in 2013, 2014, you had that cycle, which I showed you just for reference, which I showed you earlier on here. The halving happened the previous year, then the blow-off top happened at the end of the year. In 2017, the halving happened in 2016, then the blow-off top followed. Now the halving happened here in May. Yeah, so the halving happened here for this cycle. So we expect that we'll have that kind of steep rise again. When you have that steep rise, there are two theories, or there are two schools of thought currently of what the outcome of this particular bull cycle will be. If we're to follow tradition, we will get to almost 300K. We'll have a blow-off top, then the price will start coming down, and then the price will come down and do like 80 to 60% correction back to current day price of almost 60K before it continues to rise again. That is the extrapolation of what has happened in the past. However, there's a second school of thought that believes that because we now have new market participants and we have, new players in the markets, that this cycle is likely to be altered. I don't have a magic mirror, as you say, and I don't have prophetic insights for crypto yet. But I can tell you that this second scenario looks more plausible, traditional scenario. One, because again, we have that finished supply of Bitcoin, so it's not going to increase. Two, because institutional money, they have tons of cash. The overall cryptocurrency, market cap, as I've told you, just dropped out at 3 trillion. 3 trillion was what the Forex market was in 2008. So there is a ton of money sitting in equity that I showed you in one of those slides. Equities market is over 200 trillion, probably like 500 actually, if you consider all the other asset classes. So there's a lot of money sitting on the sideline, still waiting and watching this asset class. Some of them have started deploying, and some of them are still waiting and saying, can this market take a $1 trillion sale? In terms of, liquidity, is this market liquid enough to take a $1 trillion sale, or, half a trillion, or $500 billion sale? So when the market gets to these levels, which, in the terms of total market cap is somewhere in the region of 5, 6, 7, 10 trillion, new participants will get interested, because what it then means is gold is currently 10 trillion. So if Bitcoin starts to get to like 5 trillion, it will start to catch the attention of very big gold bag holders. As a matter of fact, if we were to juxtapose the price of Bitcoin versus the price of gold, you'll see that gold has been failing significantly against the price of Bitcoin since August last year. So these cycles created by Bitcoin hitherto has been what has driven the price of Bitcoin and how the crypto market has evolved, generally speaking. But going forward, as I said, we have a possibility that yes, we do have our blow-off top, as this arrow suggests. But instead of having a sharp correction and then a subsequent bear market that lasts for 2 to 3 years, I think what we will have is a plateau of some sort of the price of Bitcoin, or a general. So after the correction, maybe 6 months period of accumulation, or 8 months or 9 months, then the price starts to climb again. And then, the price just keeps going up till the next halving and the next bull run. So I think that's more plausible, because now we have tons of institutional investors positioning to either buy Bitcoin directly on layer 1, meaning buying the actual commodity, or positioning at layer 2 and layer 3 of the finance level, meaning buying ETFs or buying ATPs or buying futures, as it were. So really, that has a potential to keep pushing the price higher. So like I said to someone earlier on, the business model for the average person. And I can say that boldly because I think everybody on this call, the person of color, as I can see right now, the business model, and the personal business model would be to, acquire funds in fiat and store them in crypto. Because from what I'm seeing, obviously, we will be 10 times where we are now, another 5 years, definitely. So this is how, the cycles of Bitcoin is being driving the crypto markets. I think it's time to take questions. If you have questions on Instagram, just type them in. If you have questions on Zoom, you can unmute your mic and ask your questions, and I'll take your questions. I'm a bit over time today. I've talked too much. Sorry. Any question, any clarification, just let me know, and then thank you.
Doctor, good evening.
Good evening.
What do you make of this? Some of this metaverse tokens, especially Engine and Sandbox and Mana, which are still performing well in spite of the market correction?
Okay, so good question, very good question, Albert. Metaverse. So within the crypto world, there are innovations that that come with each cycle. In the last cycle was when you had the innovation of initial exchange offering, initial coin offering, meaning ICOs and IEOs. And essentially what those were just people selling off ideas of what they could do with the blockchain, and then people buying into those ideas. So over time, because of Ethereum, we need to give credit to whom credit is due. Because of Ethereum, we've now had ecosystems being built on the blockchain. And as a result of that, there's so many offerings and promises of value that have been pushed to markets just on the basis of a concept or an idea. Now, an offshoot of that is things like decentralized finance, decentralized insurance, decentralized lending, all components of DeFi. Another one, the second wave, was NFTs. And I think NFTs reached a peak just after the crash this year. Now, this metaverse phase, quote unquote, is not exactly new. And I'll give you a good example. It's not exactly new. It's just that the hype, that's the current hype. And what we need to do actually is to position to ride the hype as opposed to become fans of the hype. Engine, for instance, Engine was like the first platform that promised to create an ERC token for non-fungible assets, meaning create unique tokens that are unique in their own rights, like artwork. And the idea Engine was bringing to the market then was to create a platform that allows you to convert your in-game tokens into valuable tokens that you can sell on the markets. On the back of what Engine started doing was when people like Mana, Sand started building, because the expectation then was that if we now have this platform that gives us ability to create non-fungible tokens, then we can as well go ahead and populate, an alternate universe. And I talked about metaverse last week, but an attempt to create an alternate reality, and that has been around for quite a long time, since we started video games. Actually, that's the time we say we started having metaverse. And I remember as far back as the 90s when we used to play Sega Mega Drive for Mortal Kombat. If you had some particular key combos, then they were like what you call cheat modes. They will give you extra life, or you could get extra stuff on the game. You could perform special functions that were not part of the normal functions, just because you had those things. So it was on the back of that that people started creating in-game purchases. What Metaverse is doing has just been brought to light by Facebook, because Facebook saw that money is going to be in this thing, and people are no longer interested, as it were, in catching up on Facebook and have their data being sold. So Facebook decided that they were going to rebrand themselves Meta, because they wanted to be the mother of the metaverse, as it were. That was off the back of failing to create the cryptocurrency they wanted to create because of regulatory constraints. So I don't think the meta concept that they're working with is going to serve them too well. For a while, they'll be able to muscle around, but I think the metaverse itself is completely outside of Facebook's own metaverse, as it were. However, which is where I'm going with this, metaverse tokens are the hype of the moment. They're going to sell a lot till the end of the bull run. After this bull run, there's going to be a correction. I don't know how long that correction is going to last for, but I can promise you that every single altcoin is going to drop at least 80% in value. So yes, metaverse token, fantastic idea, fantastic concept, fantastic token. Some of them have done 300%, some of them have done 1,000% in the last 1 year. But keep in mind that it's just the hype of the moment. It's not like it's not real, or what they're doing is wrong, or what they're doing is fraud. It's just like that's where the media attention within the cryptoverse is now. And as a result of that, there's a lot of money going into it. I'm not sure which of them is going to survive the next bear market. And the next bear market might not be long enough for them to all die. So they might actually all survive. What I'm saying is, if you're investing in metaverse token, have an exit in mind, because that will help you to keep the value of your asset. Because there's no good investing in mana, for instance, or sand at $4. It goes to $20. You didn't sell, then end of bull run comes, then it goes to 10 cents or it goes to 1 cent. And you never know. Like I said, the top 20 coins, out of the top 20 coins in 2013, only about 3 of them are still alive. In fact, in 2013, Ethereum was not top 20. So it's very instructive to be circumspect when you're in, and I had a discussion with somebody today, I think around this as well, when the person was asking me why I wasn't introducing people to meme tokens on the WhatsApp group. And I was like, yeah, you don't want people to devote their resources to things that you don't have at least some basic minimum guarantees. Meme tokens is as good as just betting. It's like going to a casino in Vegas and putting your money in the slot machine. Yes, you might make a shitload of money, but again, the money might just be flushing down the drain. So metaverse, good concept, valid concept, actually may be a very strong concept in the future, but don't get carried away by the hype. Buy the rumor, sell the news. That's what I would say about that comment. So Albert, sorry.
Yeah, thank you very much.
The YDX, to hold or not to hold still? I would say to hold the YDX still, and I'll give you my reason. I know it's been dropping. I know it's been dropping significantly. If you're tired of holding, you can sell it for Bitcoin. It's also dropped against Bitcoin, actually. It's dropped fairly against Bitcoin. But the reason I was canvassing for the YDX is just very basic. The YDX is the first DeFi platform that gives you the ability to set limit orders. Now, what are limit orders? For the benefit of people who don't know what limit orders are orders that you want to execute on an exchange at a particular price. You can do that on normal exchanges, saying, okay, I want to buy Bitcoin at $40 or 40,000 and leave it there. If Bitcoin gets to 40,000 any day, it's going to pick that order. And you can say, well, I want to sell my Bitcoin at 100K. If Bitcoin gets to 100K, the order will get automatically triggered. Centralized exchanges are becoming mainstream, meaning they're beginning to get involved with government, they're beginning to get a combat regulation. As a result of that, traditional whales and big retailers in crypto are no longer interested and are looking to move away from them. The YDX provides a very, very good opportunity for them to do that, because it not only allows them to keep control of their crypto without being encumbered with AML, KYC, and all that. It also allows them to not only even trade, what's it called, trade place limit orders. They can trade leverage, which is very interesting. So let me show you the exchange, just so I'm not talking in vacuum. With this exchange, you can connect to your wallet. So if you have your token in, let's say, Trezor, which is an offline wallet, you can connect your wallet directly to the YDX from this platform, and then you can move. You need to move some funds, maybe like the amount of token you want to trade. You need to move it on the chain directly on the Ethereum blockchain. Currently, I think it works on Ethereum alone. You move it directly on the Ethereum blockchain from your wallet to a staging wallet that is provided by this platform. That wallet is still linked to your wallet. So anytime a transaction wants to happen on that wallet, it asks for your permission to sign that transaction. So when you connect the wallet, you can see you can place your orders, you have positions, you have the normal trading view that you will have if you're on a centralized exchange. So you're able to actually, place orders, take off orders. You're actually even able to do leverage trading, I think to like 5 or 3x or thereabouts. So this feature for big retail investors, and I think at least in near term, I think they're going to get a lot of value, because what they've done is they provided a platform that is better than Uniswap. Uniswap was finance platform from last year. They provided something better than Uniswap. So until we have something better than them, I think they're still good to go. Like I said, my projection is that might do a 10x. Yeah, I've not seen any centralized exchange use this functionality yet. This type of functionality, I've not seen any other one. Many of them, yes, you can connect your wallet, buy and sell, or very hard you see ones where you have market orders, limit orders, stop orders. As a matter of fact, you also have earnings. You can earn whilst while connected to the platform. So if you traded on the platform, link wallets. So when you send the request, comes up on your wallet and ask that you sign. When you sign, so it's asking me for password. I think I have a wallet extension on this browser. So if I link this platform of my wallets, so for that reason, I think it's a good hold. Like I said, everything will respond when the price of Bitcoin goes above 100K. So I would implore you, I know it's hard, I would implore you not to sell it. The same way I told somebody on this call last year not to sell Uniswap when the price was crashing after they launched. And the person made about, must have been like 5x off the back of that advice. So I would advise you to hold. Want to sell, wait till when Bitcoin exceeded the 100K or sell. That would be my advice. All right, guys, it's been a long evening. If we don't have any question, I'm happy to let you go and enjoy your weekend. Have a lovely one. See you next week. Bye.